Hello and welcome to CryptoWeeklies. My name is Josh, and today we'll talk about Bitcoin. We have a newly released model for Bitcoin and its AI-based forecast. We'll first start with what some of the cryptos performance over the last key periods, such as 24 hours and 7 days. You can see most of the cryptos are up over the last 24 hours, including Bitcoin up by about 1.09%. Over the last 7 days as well, the performance has been largely up in the market. Bitcoin grew by about 5%. There are cryptos such as Stacks, VeChain, Maker. We have AI based forecast for all of them on the website and as well as on the channel. So if you're interested, you can check out the videos on the channel released recently about VeChain as well as about ICP and XRP and its AI based forecast. Over the last 30 days, definitely most of the cryptos are down. Some notable mentions which are up are Tron and Maker and XRP. Over the last 90 days, again barring for Kaspa, XMR and Tron, and a couple of Toncoin and Uniswap and XRP, most cryptos are down, some as much as about 50%. Let's go and check out Bitcoin's current regression based analysis, which includes its current price action right now at around slightly around 60k, slightly below that at around 59,500 $650. That's the current price action for BTC. So the rally is definitely back up. You can see over here the price action slightly under 60k. The market grew by about 2% over the last 24 hours. The fear and greed index is at around 45. This is again in terms of where the price action sits is fairly close to the fair value band, which is the fair value line in the pink color. This is the polynomial regression function, which first of all judges what is the fair value for BTC, and then based on the 3 standard deviation intervals to the upside and the downside covers about 99% of the price action historically speaking, and provides us where the current valuation of BTC is in terms of historical price, whether it's close to 1 standard deviation bottom like it was during November 2022. Again for BTC, that was if you remove the upper 2 and the lower 2 bands, you can see that that's the place where BTC's price action sits inside those bands about 60 or 68 or about 70% of the time. Right now we are in the middle of that range. The 1 standard deviation peak for BTC at this point is at around 100k, whereas 1 standard deviation bottom is at around 37k. So if prices were to go down at around 35-36k, it would be similar to in terms of the regression analysis, it would be a similar drop to what it was in 2022 when the price were at around 17-18k. Similarly, if the 2 standard deviation bottom or 2 standard deviation peak theory per this theory, BTC hit 60k in early 2021 and the price was close to the 2 standard deviation peak. This 2 standard deviation peak right now is at around 163,000. So if BTC were to top today and have a similar top as in 2021, that price for that top is at around 160,000 instead of just 60,000. So that's the beauty of growth of BTC over a period of time. You can see the bands have an increasing price relationship with time, although we have not configured it specifically to have a linear relation where the price has to increase, or as the price has to increase as the time proceeds, the price doesn't have to have a linear relationship. But still even after providing that degree of freedom, still for BTC you can see the price have been trending up with time. Again, none of the content on the channel or on the video or the website is a financial advice, but definitely you can see the upswing of the BTC's price action in terms of even when prices are below the fair value band, like we were between June of 2022 to about October November 2023. The prices are not going a lot below the 1 standard deviation bottom like they were doing in 2018 and 2019. So you can see that the quote unquote volatility to the downside has diminished, so might as well see a diminished return in the peaks as well. So Personally speaking, I am more interested in one standard deviation peaks as opposed to two standard deviation peaks. So the reason because if you look at the market cycle of 2017, BTC hit its 3 standard deviation peak and exceeded its 3 standard deviation peak in the per the regression analysis in 2017. In the last market cycle, BTC failed to reach the 3 standard deviation peak, but came really close to the 2 standard deviation peak. So if we were to extrapolate this further in the next coming potential bull run, the 1 standard deviation peak would provide the necessary downside, but also an information about where the upside could potentially lie. So we again have been working on extrapolating this regression bands, but haven't this is still in beta mode. It's not fully fleshed out yet. In terms of where to see Bitcoin's valuation in terms of the simple moving average related short term bubble risk, this is normalized risk between 0 and 1 based on how the performance of Bitcoin has been over the in terms of the price and the relationship of price and 20-week moving average. This is normalized between 0 and 1. So the key idea is when the risk is in the highest risk band, that is below or beyond 0.8 and beyond 0.8 and 1, the color is red, and that's the worst time to get in the market but a great time to get out of the market. Similarly, when the risk levels are so the risks have been going down ever since March of 2024, when the short term bubble risk was at around 90 to 0.92 level at the peak, when the valuation of BTC was at around 73k. Right now the risks have bottomed up at around in early July at around 0.18. Right now it's at around 0.25. It's the second best time to DCA BTC, again at a lower risk than when the price is too far gone away from the simple moving average. This is again based on the historical data that we have of price and 20-week simple moving average for BTC. So let's go and check out the AI based forecast for per our model for Bitcoin. This is the latest model that we had trained on the price action till about July of 2020, middle of July of 2024, when the price for this week at an average at around 58k. Per the base case scenario, this is one standard deviation scenario. Base case is between 58k to about 66k between now and December 2024. The one standard deviation bull case scenario at about 68% confidence the price action to stay within these bands, the yellow and the green band, between 62k to the upside to about 95k to the upside, and to the downside between 45k and 55k till December. In terms of if the crypto market were in a 2 standard deviation rally mode, the bear case scenario and the bull case scenario, the price action should be theoretically between 65k and 131,000 k, so 131,000 USD. This is the 2 standard deviation bull case. The bear case 2 standard deviation, that is the price action 95% probability that the price action is between these 30k and 131k in December. But you can see this is not a constant value. So if you are interested in week by week what are the 1 standard deviation, 2 standard deviation bull cases, we have integrated the table in the analysis. So 3 standard deviation bear case is the least that BTC could be at any week, and the 3 standard deviation bull case is the highest valuation for any particular week. You can see that the price for this particular week was the lowest it could go was at around 50k, slightly under 50k, and highest it was at around 70k. But as the time proceeds, the difference between the 3 standard deviation bear case and the bull case keeps on increasing. That's because with the farther we are out from into the future, the harder it is to predict what could happen. So again, this is based out of historical price action. You can see as we go higher and higher into the likelihood into the future, the range goes between 20k to about less or about 180k. So that's the nature. So if you want to kind of minimize for the volatility, you can stick with the one standard deviation, which is this 0.68 bull case, and the bear case, that is between 45k and again 95k for December again, and this is available for each week. So if you are interested in looking at this tabular format, you can use the link on the bottom of your screen. You don't have to sign up or pay for anything. In terms of analyzing where the recent model, that is, we have released the time weighted average price for BTC, analyzed using the close price for each of the day. You can see, and this is color coded based on the TWAP risk score, that is the difference between the price, the TWAP price, and the current price. This is right now in a yellow territory, which is again not as risky as the orange or red. That's when the peaks usually occur. The best time to DCA per this model is again whenever you see some blue, at least light blue, or the darkest shade of green price action below this color code is definitely a favorable time. Right now we are kind of in the middle at around 60k, and if you were interested in looking at the TWAP based risk score, you can toggle and include them, and then if you are interested only in the risk, you can close out the price action and analyze the risk, and this is the normalized risk between 0 and 1. Right now the risk is at around 0.75 based on the TWAP analysis. So with this, I would like to conclude the video. Hope you enjoyed the content. If you did, please subscribe to the channel, also give this video a like, and hope to see you again tomorrow. Thank you and have a nice day. Bye bye.